Okay, for our practice exercises to finish out chapter 3, I am already in where basically we left off in our part 1 of this chapter, since we're breaking it into 2 parts. We left off with number 8, actually with number 7. We're going to come back and look at 7 and 8, or if it's just 8. But we're going to do number 9 first, and then we're going to go back and do the financial statements as well. And then we're going to do one combined problem that has everything. So the first thing here, none of the exercises in the practice do a real good job of the closing entries nearly as well as what we just did in our part 1, where we looked at closing out Dr. K. So this one, it only has us do closing out the revenue and expenses. So basically 2 of the 4 steps. So that's not as good, but we'll do as much as we can. So we've got here the account balances for net sales, the cost of sales, advertising, and other expenses. Okay, cost of sales, that is an expense, and that's an expense we're going to really look at starting next week when we start looking at inventory and selling inventory. But that is something that we do have to close out. All right, so we're going to close out just like how we did in our practice before. We're going to close out our revenue. Remember, revenue has a credit balance, so we're going to debit our revenue account here, and they call it, in this case, net sales, so we'll call it net sales. We're going to debit our net sales for the 549,780. We have to know that that is a credit balance. And if you open up your T accounts, you can be kind of refreshed that, oh yeah, revenues have a credit balance. And then we need to debit our income summary. Sorry, for our income summary for the 54780. And then we go on to part 2. And all of our expenses all have debit balances. So we need to credit those. And we are going to debit our income summary. But if you remember from our practice, we don't really know what the income summary amount is going to be. So I'm going to temporarily leave that blank. And we'll come back and fill that in with the total once we're done with all these credits. So our first, we're going to credit to get rid of our cost of sales of $335,196. And then we had a advertising expense, so I'm going to go ahead and credit that. Advertising expense $54,834. And finally, we had our last one, our other expense. That amount of $117,907. Now we can easily go ahead and get our debit. Our debit has to be the total of all of these for our income summary debit. Easy. Hard to do. We got 507,937. 937. Now let's check it, make sure that looks right. There we go. Yep. We are good. Okay, now let's go back and number 8. We are going to use this to do number 8 and then number 10. I don't know why they skipped a number like that. But number 8 deals with the income statement and then also the retained earnings statement. And then number 10 finishes out the same problem by doing the balance sheet. So this is kind of a review, but it's going to kind of help us to see where the retained earnings numbers come from. As with our closing entries now, hopefully we've got a good feel for these. All right. So it says here the retained earnings balance is 155. Yep, that's where we're at, 155. So nothing really happened with the retained earnings throughout the year, which is is common for most companies. Usually you don't affect your retained earnings, only doing that at the end. There are different times when you do, but for this one, it's just a very typical problem. Shows here that we've got dividends, so we're going to be closing those out. We're going to be closing out our fees earned and as well as our expenses. So let's get into this with the income statement. Hopefully we have a good idea and remember how to do this. Our revenue, we only have one revenue for this company, the trucking fees earned. So let's put that in here. Just put it in exactly as they have it, trucking fees earned. And then again, we don't need to put it in the subtotal since there's only one. We can just put it over in the total column of the 130,000. Come down to the expenses and we're going to just simply list. Looks like we have 4 expenses, so that won't take us too long. We've got depreciation and salaries expense. Depreciation, expense. And our last 2 were office supplies and repair expense. Office supply expense and repair expense. Okay, we've got all those forward. Now we just need to put in the amounts. 23,500, 61,000. So we put these over in the subtotal because we have more than one expense. So we want to total them all up together. 23,500, 61, all right. And then the last 2 are easy, 8 and 12. And it's good that they already have it totaling up for us, so that's nice. And then when our revenues are more than our expenses, we then simply call this net income. Net income of 25,500. Now, you might want to, I'm going to jot this down, 25,500, because that's going to carry over into our statement of retained earnings. Part 2, it's got our proper title all ready to go. Retained earnings at the beginning of the year, they told us that. Let's just get the amount. It was 155,000. Now we add in our net income. And that's where we simply get our number from last time, 25,500. And then we subtract out our dividends. And our dividends were 20,000. Now you won't put it in as a negative here. It tells you to put it in to subtract it out. So don't put it in as a negative like how I did on my Excel sheet. I do that to adding up purposes to make it so I don't forget to add it in. It's already set up here in this little formula. So just put it as less. So that's just 20,000. And our retained earnings, our new retained earnings, this is the other number we're going to write down because it's the second connector. So I'm going to write down 160,500. And that's the amount that we're going to use when we come over to number 10. All right, so for the assets, they have them broken down just like how we did way early on the first day. I broke them down. The problem didn't necessarily in the connect, but here they're going to go ahead and have us break it down into current and non-current. So here we got our current assets. No cash without even looking has to be one of them. Every company has cash. 8,000. And go ahead and put us over here. I usually have us put it over here in the subtotal, but that's okay. Accounts receivable. And then we had office supplies as our last current asset. So accounts receivable 17,500. Office supplies, make sure you put the supplies, that's what we still have left, not the expense, that's what we've used. Office supplies of 3,000. And as it says here, that's our total current assets. Now we're ready for our non-current assets, or if it doesn't like that, long-term assets. Or if it doesn't like that, we just got to figure out what it wants. It wants us to use plant assets. Just another terminology. I like using non-current. That's just my personal preference. Long-term assets also works. They call it plant assets. Okay. So plant assets, that's basically all of our long-term assets, and that's going to include our trucks, the accumulated depreciation. Those two go together. Remember, we talked about that with the adjusting entries. You combine them to get their book value, and then the land. Okay. So we're going to put up here, let's do our truck. And our truck was at 172. Now, right next to truck, everything, we put them together. We got our accumulated depreciation. So let's put that in here, 36,000. Notice it knows when you accumulated depreciation, we don't need to put it in as a negative because it knows that you're subtracting that accumulated depreciation to get your book value. So this is what the truck still has left to depreciate. Remember, that's what we said that the book value means. It doesn't mean that's what it's worth. That's not the fair market value. And then finally, we had our last item, land. Land doesn't depreciate in accounting. It doesn't, it doesn't wear and tear unless you actually do something to it. So our land is 85,000, and that's what it's going to stay. We don't depreciate it. So 85,000. Adds those up, and then it combines in the total assets. So this 221 is the land and the book value of the truck. And then it takes the 221 plus the 28,500 current to get our total assets. Now we come down to our liabilities. Just like with the assets, we break these down into current and non-current. So our current liabilities, ones that we're going to be using, paying off really soon. Accounts payable, that's one you usually pay off real soon. Interest payable is usually one you pay off real soon. And then long-term notes, that's pretty self-explanatory. That's going to be paid off over a long time. So we've got account payable and interest payable, 12 and 4,000 each. So we can put these in. Accounts payable, 12,000. And then we had interest payable, 4,000. I always have to go back and make sure I didn't read those wrong. Yep, 12 and 4. That's our total current liabilities. We come down here to our non-current, long-term. Yep, that's what they want. Long-term liabilities. And they call it long-term notes payable. So that's what we'll use. Long-term note payable, 53,000. And that's all we had. We didn't have any more long-term, so there's nothing really to total. Add up our current plus our long-term, we get total liabilities of 69,000. Now we're ready for our last two items. The only two things we have left, if I look back up here, if I had this printed out, what I would be doing is checking off or Xing all of these that I have used, and knowing that I used all of these down here in my income statement and statement of retained earnings. I used the dividends, that's done. Revenue's done, expenses are done. Only thing I haven't used is the 20 grand for common stock, and I haven't used that new number. We wrote it down, 160,500 of my ending retained earnings. So that's going to be my only two things left: the 20,000 of common stock and my new retained earnings number. So I'll come down here and put in my common stock. 20,000. Then my retained earnings. This would be my most up-to-date number, the 160,500. Gives me my total equity. And then the final thing I always want to check, does my total liabilities and equity, 249.5, does it equal my total assets? And it does. So I can be rest assured that I probably have done everything correct. And it looks like I did. I got all check marks.